Monday, April 11th, 2022, Monaco 64, home of alternative economics and contrarian views. We're going to look at China today and whether sanctions against China, similar to those that have been implemented on Russia, could greatly unsettle the Western bond markets. And that would be very serious because that's where you get the source of financing to keep our economies going. Before I start though, I like to say, if you enjoy my videos and if you've been watching my videos for a while but haven't subscribed, think about subscribing. Think about also letting friends, families, and colleagues know about my channel if you think they'd be interested in this kind of subject. The main purpose of my channel is to try to wake the public up about our monetary system, the fiat currency system that we've had since 1971, why it's a bad system, and why we need sound money. Sound money, of course, puts a straitjacket on government, politicians, and the bankers, and it makes sure that workers get a fair wage because their money is sound. So that's the main purpose of my channel, and also to try to help people understand the financial markets, having worked in the financial markets for over 20 years. So, China. I'm seeing a lot of stories, a lot of headlines about China. And it's not just recent. Even when the conflict with Russia started, February 24th, well, between Russia and Ukraine, but really we are at war against Russia, the Russian people, not a kinetic war. Maybe Ukraine and Russia are, but the West has imposed sanctions. The West has frozen 300 billion or so of Russian foreign exchange reserves. They've cut off quite a few of their banks from SWIFT. They've done everything to try to destroy the Russian economy. Of course, it has backfired a lot on the West, and I think it will continue to backfire. So there has been speculation, of course, that China would be next and the question of Taiwan would be next. And I think looking at the stories and headlines that are popping up, it's almost like the mainstream media, the politicians, treasury officials are trying to get the kind of the idea out there that something is going to happen and that China is going to have to be the one to blame for what's happening, whatever, in terms of Taiwan, or it could be Solomon Islands as well, which is a very strategic group of islands, island nation state near Australia and New Zealand. Strategic because if China has a presence there, and that's what it's all about, they could cut off NATO or the US Navy from going to help, let's say, Australia or New Zealand. So it's a very strategic place. It was where they had the Battle of Guadalcanal during World War II against the Japanese. But what about the bond markets? What's that got to do with the bond markets? And the bond markets, we need to understand, that's what drives the Western economy. It has been the main driver since the early 80s. It's the whole source of financing for a fiat currency system. And it's been a great engine of credit infusion, monetary infusion, fiscal stimulus. And why is that? Well, because for 40 years, and I think this has got to do more with cycles, the cycle for yields and inversely bond prices, well, for yields it's been lower, ever lower. And yes, there have been things that have helped that cycle, and globalization, and the fact that China, with over 1 billion people, and India have uh, come onto the global economy, and they've been producing a lot of cheap goods. And there is a flip side to that, of course. They earn a lot of foreign reserves. And of course, bond prices have gone up because there's been a willing buyer of those bonds, especially foreigners. And we've seen how the sanctions in Russia have greatly disrupted commodities markets, because the Russian economy isn't as big, of course, as China. Russian reserves, they are big, but not as big as China. But the great disruption has been real things, commodities. And I think if the West, especially the United States and the UK, which is the US's mini-me, so to speak, if they go against China, it could make what's happening now in relationship to Russia and the commodities market look like a picnic. And this would affect the whole financial system. And one of the reasons I think it could, because this is my opinion, I'm not saying it's going to happen, but there's a danger of it happening. And I'm kind of not concerned, but I can see it coming. So you just have to look at list of countries by foreign exchange reserves. You can get this from Wikipedia. And you see that China, as of February 2022, has got almost 4 trillion in foreign exchange reserves. Japan has 1.384. Switzerland has a trillion, and the Swiss reserves. There's more to do, I would say, with the Swiss National Bank policy, and also maybe investment flows into that country. Look at Russia, 604 billion. A lot of that has been frozen. The only reserves they've got access to right now is their physical gold. So China has almost 6 times more reserves than that. And it's the banker to the world, so to speak. I know central banks are important, but China is the banker to the world. So I would say Chinese officials are probably concerned about their reserves. And if the geopolitical situation, if the foreign policy stance of the United States gets more and more hawkish in relationship to China, we could see China try to cash in those foreign reserves. And how do they do that? Well, they'd have to sell a lot of their bonds, and they're not just treasuries. I would say China probably has a lot of Eurozone bonds. What are Eurozone bonds? Well, they're the sovereign bond markets of the countries that make up the euro currency. And I'm sure seeing that China, the EU, and the US are huge trading partners, a lot of those FX reserves are in Europe and in the US. And when you do sell your bonds, usually the price, especially China is the biggest holder of the reserves in the world, and they start selling their bonds, prices are going to drop, especially now with the Federal Reserve and even the ECB saying that they're going to cut back on their QE, or they're going to start even selling their own bonds. It could create a massive chaos. It could create massive chaos in the bond markets. And by that, I mean volatility. It could drive yields a lot higher. And you drive yields higher, it affects the whole financial system. It affects stock prices, corporate bond prices, everything. And as I said, it could make what they've done to Russia look like a picnic. It could be a huge thing. So before we look at the markets, just show you a few stories that have kind of woken me up a little bit to the fact that we need to keep this in the back of our minds, because it's huge. And some people might argue that this is being done by design to bring down the whole house of cards, because there's so much debt in the West. They're just bringing it down. Some people might argue that this is happening because of incompetence of Western leaders. And I don't really think it matters why it's happening. What I think matters is the consequence of what's going on, and that is like a massive disruption. It could bring down the whole Western financial system, and that's what you need to be prepared for, I think, in my opinion. So U.S. would sanction China if it moves aggressively against Taiwan. U.S. Treasury Secretary Yellen said the U.S. would show the same resolve as it did in the case of Russia. So there you go. They're trying to get this in people's minds that this could happen. Yes, she said right now there isn't a problem. She says also that they don't see any problem right now vis-a-vis China, Russia, and the Ukraine. But she mentions Taiwan. So I think it's a worry. I'm going to put a link to this article below in the description. You can go through it. What's the other story? Well, I spoke about this yesterday in my live stream. U.S. to send officials to Solomon Islands due to tensions over China security pact. So there's another one. And then there's another one on Zero Hedge this morning. China's breathtaking nuclear expansion confirmed. Beijing officials cite fear of US-led regime change. Again, I'll put it below in the description and you can go through it. And the other thing that I saw, and I couldn't really in the beginning, the last week or so, they've been talking, even more than a week, a lot of lockdowns in China, especially Shanghai. Some disturbing video came out of people locked in their apartments. And what's this got to do with what I'm talking about? Well, who knows? Maybe the Chinese officials are preparing the population there for some major disruption to their livelihoods, and it could all have to do with what's going on geopolitically. We also heard Boris Johnson the other day, I think he was on GB News, saying that he wouldn't rule out another lockdown. So am I saying there's going to be another lockdown? Who knows? And there are other there is other anecdotal evidence. For example, I've heard from my viewers during the live stream yesterday, and some who contact me, that they're finding it hard to get gasoline or gas or petrol or diesel in the UK. So there you go. Yes, China would be huge. It would be like sanctioning your banker, the guy who keeps your financial health going, who lends you, who gives you an overdraft, who keeps financing you. It would be huge. So we need to really keep an eye on this. And again, there are ways to protect yourself and even maybe profit from it. But it's not all smooth sailing, I would say. One way to really protect yourself, of course, is having physical gold and silver outside the system. And I would say the way to maybe profit from it, but be prepared for a lot of volatility, is to have stocks related to mining, related to commodities. Yes, because I think the bigger shift is the shift from paper to hard assets. And if we lose the major financier for our financialized, credit-driven Western economy, well, it's going to make real things look a lot better. So with that, let's quickly look at where the markets are this morning. It's 20 past 8 a.m. London time. We've got spot gold down just over $2 at 1945. High's been 1950. The low's been 1940. So quite a narrow range overnight. Silver is up about a cent, so virtually unchanged at 24.76. High's been 24.91. Low 24.65. The Dow futures down 194 points, or 0.5%. The NASDAQ 100 future is down 115, or 0.75%. S&P future is down 28, or 0.2%. FTSE is down 30 points, just under 0.5%. Eurostoxx 50 is down 1%, or 35 points. To the currencies. Sterling or cable is down 1/4, just above 130. The euro is unchanged, 108.79. The dollar is very strong against the yen. We're actually breaking the 125 level, and that's quite significant. So the yen is continuing to weaken, and this is due to the Bank of Japan policy of yield curve control. They want to help out the Fed and the West. So they debase their currency. They keep doing QE, and Japanese savers, they'll go west to try to find more returns. It's a way to try to keep the Western bond markets from collapsing. And you see how much foreign exchange reserves Japan has, but it's nowhere close to what China has. Anyway, yeah, the dollar is up almost 7/8%. We're at 125.30, and this 125 level is very important. We need to keep an eye on Japan, actually. The dollar is up 1/4% versus the yuan at 638.39. And the dollar is up slightly versus the Swiss franc at 93.56. Aussie dollar is down almost 0.5% at 74.25. The dollar is up 1/3 versus the Canadian dollar at 126.14. And the Kiwi dollar is down 1/4 at 68.27. So the dollar looks pretty strong here against other fiat currencies, but don't let that fool you, because all fiat currencies eventually go to zero, even the US dollar, which is the biggest of all fiat currencies. So let's look at the commodities market. We've got crude oil down over 2%, 95.37. Brent crude is down also over 2%, just above 100. What do I think is happening here? Well, oil had a good run since the war in the Ukraine, and even before that. And I think right now it's just consolidating. I don't think the bull market in oil is finished, but we could see a lot of volatility in the coming weeks and months. High-grade copper is down just over 1% at 468, and U.S. nat gas is virtually unchanged at 632.20. To finish off, last but not least, let's look at the bond market. The 10-year yield is actually near the highs of the year, or at the highs of the year. It's up just over 3 basis points at 275. Overnight, it's been at 278. And I think it would be a lot higher. Yields would be a lot higher if the Japanese weren't really bashing their currency as they are. The 2-year yield is up 4 basis points at 256. So the curve has disinverted for now. And we're going to keep an eye on the yen as well, and on bond yields. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.